She's not. I was going to say it.
Michael, right?
Yeah. Wait, yeah. Should we do introductions? As we step into the fourth quarter of 2024, we are seeing lots of changes within the real estate industry. We're seeing changes with the mortgage rate. And of course, as we approach the election, there's going to be even more. So today we're going to sit down and chop it up, and you don't want to miss that. So today we're sitting here with Sam BAUER of Goosehead Insurance, Crystal Lorenzo from Coldwell Banker, Michael Wright of HMA, also known as Holland Mortgage, and Becky OFFUTT of Hammonds Company. So we're going to go over and just kind of talk about what we're seeing right now with the industry and what changes we're expecting. Because with that interest rate coming down, we're starting to see things change. There's more buyers entering the market. There's more sellers getting off the fence to put their house on the market. So there's more inventory, which we haven't seen in a long time. So I just want to chat with you girls about what you're seeing, what buyers and sellers that are getting ready to enter the market need to know. I think the biggest one is the interest rate. So do you want to tell us a little bit about predictions in the mortgage interest rate?
Let's start with the best news in the industry.
Yeah, that's right. That's
the interest rate. I know it doesn't necessarily affect people that are buying a home, but one thing to note is that refinances are actually up 16%, which is not that way for a while. Obviously, there's a lot of news out there about the Fed cutting rates and what's going to happen. And all year long, there's been these predictions of they're going to cut the rate, they're going to cut the rate. Well, then they didn't for a long time. But we are seeing some predictions. And I don't know if you want to talk about predictions now of what the fate is.
Yes.
But the Fed is going to use the rate, or if you want to get into that later, but I'm happy to touch on that.
Yeah, let's go ahead and touch on it, because I think that's probably the number one question people are asking is, how low do you think it's going to go, and what are the experts predicting?
You know, it's funny because not this July, but the one before, there's a lot of talk out there about rates getting down to 5%, and people were doing the 2-1 buy downs, right? In hopes that, hey, in the next 2 years, you're going to have this lower rate. Well, that didn't necessarily happen. So now, especially, during an election year, things get a little bit different anyway. We're starting to see a lot of volatility, but right now, the odds that I'm being told about when it comes to the Fed rate cuts is that at the September 18th meeting, we're told that there's a 100% chance of the Fed cutting rates.
100% sounds pretty strong.
It does.
Yeah.
It's like the weatherman telling you that there's a chance of a snowstorm.
Right? We know that.
So yeah, know. So I'm telling you the predictions, but I take everything with a grain of salt. True. Just never know. Now, at that September 18th meeting, the word is there was a 30% chance that the Fed would cut rates up to 50 basis points. Now, that actual opportunity, they're saying, will be more like 56% possibility that that'll happen. 2 more meetings that are going to occur would be on November the 7th. Again, they're predicting 100% rate cut there. And a 67% probability that we could see rates reduce 75 to 100 basis points.
So what does that mean percent-wise? Just someone shopping for a rate right now.
So 1 basis point is 1/100th, of the rate.
Okay.
So if you were hearing 100 basis points, we're talking 1%.
Okay.
So 75 to 100 basis points. If interest rates right now are around 6.5-ish, we could be looking at the 5.5% mark. Now, in December, again, they're saying 100% chance of a Fed rate cut, and they're talking that there could be a 75% chance that rates can be reduced by 100 to 150 basis points. So by the end of the year, could we be in that 5% range?
Right.
I think that's the hope.
Yeah, for sure.
Don't worry. Anyone who's worked with me in the past, I will be reaching out to you to let you know if it makes sense to refinance.
Absolutely.
And if there's anyone that's been on the fence about buying, now's the time, right? Because, again, as these rates drop, more buyers are going to be coming out there.
Absolutely. So it's going to make competition for housing even tighter. So that's the one thing people need to remember, sellers and buyers. If you're thinking of waiting, if a seller's thinking of putting their house on the market and they're deciding if they should wait and they're thinking about where they have to move to, then that house that they are trying to get into, that they're waiting for the interest rate to come down. Well, while these interest rates are coming down, time is passing and home prices are going up. So by waiting too long for the rate to come down, you might be paying more for the cost of the house. So there's also going to be more competition for the buyer and the seller whenever they are going to do that. So there will be more homes on the market, so you're competing against more homes. But for buyers, for the buyer buying their home and for the seller who's trying to buy their next home, they are going to have more competition, if they're waiting. So it might be better to kind of jump on the rate now, since it's as we're watching it go down, and get the good sales price now. And then remember, no matter where you are in this process, you can always refinance in the future.
Absolutely. That actually, and what do you guys think about this thought? If, when competition goes up, we're also going to see sellers being more selective, right? So right now, while rates have been a little higher, we're seeing more seller assist being available. Yep, things of that nature. Yeah. Make sure that you're getting your financial house in order. You're getting your savings together. You're getting some money to put into a transaction, because as that competition goes up, the likelihood of having less opportunity for seller assist or government down payment assistance programs could get a little bit more stringent, like it did, a couple of years back.
Yeah. And if you're someone who needs that seller assist or needs FHA financing versus conventional financing, the more competition, the harder it really is for you. That brings us to a good point of whenever there are multiple offers, it's really important for sellers to not only evaluate the best offer, and a lot of times it's not the highest price, sometimes it's the best financing, sometimes it's the agent who has the best history, it's the agent who has the best team. Where, like, when I put in an offer for a buyer and we're competing against other people, I always say, like, this is my trusted lender. It's a well-recognized name. I had someone get an offer accepted this weekend, and the first thing the agent said when I called him to say I was submitting was, who is the lender? And I said, MICHEL Wright with HMA. And he said, great, love them. So it's very important, but I also say, like, I have an amazing title company that will get it done, get it closed. If we come up with any insurance issues, I have a great insurance agent who can shop it around and find a carrier who will take it. Because I guess this is the sad part of our conversation. They're seeing a lot of tighter guidelines with insurance, and we've talked about this before post-COVID, how everything was getting even harder. I feel like it's getting even harder now. Is that what you're feeling?
Yeah, it's interesting because we were told that the industry was kind of looking that by the end of this year it would start to soften up again, and we're really not seeing that yet. We are having some carriers come into the market and saying that they're opening back up to try to take more business. However, those are the carriers that have filed their rates. So their rates are higher, and they do have new underwriting rules. A lot of them are requiring higher deductibles now. So in Pennsylvania, we've historically had very low homeowners insurance rates, and also carriers have offered very low deductibles. And so in the last cycle of when everybody was trying to buy homes and they were waiving inspections, people were buying houses without really investigating them very well. They filed a lot of claims. And so what resulted in that is part of this, I should say part of the market that we're in right now was a result of that, combined with, materials are harder to find. Everything is more expensive. There's a labor shortage in a lot of those areas. It's hard to hire people. And so those claims stay openly longer, and it ends up costing the insurance carriers more money. And so in the last 12 months, carriers really have restricted the business that they want to write. Some of my carriers won't take a roof that's older than 14 years old. Some of them will only do package business. It has to be the home and the audit together. Some of them are limiting the age of the home, like it can't be older than 100 years old or built prior to the 40. Yeah.
And in Pittsburgh, we have a lot of that.
Oh, no, yeah. And a lot of roofs that are older than 40. An asphalt shingle roof is good for 20 years, so people aren't replacing them in 14. And so that's kind of where we're at right now. Is it's definitely not gotten easier. I do think it's harder to place risks than it's ever been. I've been doing insurance for 20 years, and I've never seen this happen in a market before, where every single company across the country has raised their rates by like 20%. Wow. Normally it's like 1 or 2 a year, and they'll take 3 or 4% increase. It's bananas. It is the most bunker industry or time of the industry that I've ever experienced as an insurance agent. But the blessing with that is that, like, at least for my agency, we offer 50 companies.
Right.
So we are still shopping it around. It might take us a little bit longer because we're making more calls to underwriting, explaining things. And there are carriers that will do replacement cost on the home and actual cash value for the roof. So if it is an older roof, I know we just have to explain to the client, like, hey, your roof's not going to be covered for replacement costs. You'll just get actual cash value. Okay. But if there's a total loss, your house will be covered for replacement costs. And then I have a couple carriers who will exclude the roof. So if we have somebody who does have a really bad roof, we can like do that policy. Yeah, there are ways to do it.
That's good to know.
It costs more, unfortunately. 2 years ago, a client calls me on the phone. I have their policy written in 20, 30 minutes over the phone, and I'm sending Michael over the evidence of insurance and invoice. Now it's like a 2-hour thing. Sometimes, not every time, but many times. So just a couple things like that I would encourage clients and consumers to know is that we are in a very hard insurance market. Depending on the home that you buy and the age of it and all those things, you may be paying more for insurance. I do think it's going to soften again, probably more towards the middle of next year is when all those rate filings are going to be in, but insurance rates aren't going to go down.
Right.
It's just that there's going to be more markets that are opening back up and unrestricting those underwriting guidelines so that we could place more business with them. But the rates aren't going to be low.
Right.
And you might want to start like just preparing yourself for potentially having a higher deductible. I have a lot of carriers right now, but if the home is $500,000 or more in replacement costs, they're requiring at least a $2,500 deductible.
Oh, wow.
Some are $5,000. And some carriers in Pennsylvania are going to percent deductibles, which is very much a Texas, Florida.
Yeah, I've heard that on there.
Yeah, it's not my favorite in all honesty, but it's what carriers are doing to help mitigate and encourage clients to not file small claims.
Right.
Because at the end of the day, homeowners insurance, the purpose is really for a major loss. Your house burns down.
Right.
There's a fire, or there's a tree falls on your house and you need to get a new roof. Like, those are some of the things that it's really meant for. But due to the lower deductibles, people will file smaller claims. And that is another reason why we're kind of in the situation we're in right now. So it is hard. I think give your insurance agent some grace. They're working really hard right now, harder than we've ever worked before. And we will find you, at least I know here, we will find you a solution. And if we can't, we'll find you an agent to find you a solution. But we still haven't really turned anybody away saying we can't do this.
Right.
We just have a creative solution that might cost more. And that's kind of where we're at right now.
Well, I think it's interesting because a lot of times with insurance, we think about it from the buyer side because the buyer is the one getting it in place for the purchase. But it's going to be important for sellers to think about it too, because if their roof is 16 years old, but they have no problems with it, they need to just be aware that a buyer might have a harder time or have a higher premium or have to exclude something. So sellers just need to be aware of the insurance changes as well as buyers, just because it's something that their buyer is going to have to be going through. And that brings us to the point of there's a lot of things that we're seeing that we haven't seen before. Townships being backed up, certain townships in general just giving us a hard time. So Becky, what are you saying?
So speaking a lot to, what Sam said about older roofs and just older infrastructure, older homes. We're seeing a lot of the properties entering the market right now are homes that have been owned by the same owner for a very long time, and maybe they've passed away or they've held on to investment properties for a while and now they're trying to sell them. And that tends to mean that possibly the home has not been well maintained over the last few years or, for the last decade, depending on the situation. And we end up with these older things, so an older roof or maybe some things in disrepair. So a lot of what we're seeing on the title side are occupancy inspections and dye tests in certain areas. So Both of those are becoming more and more prevalent in certain areas because it's really the only chance that the municipality gets to check on the infrastructure of the property and the sanitary sewer system and check for safety issues. So a lot of us see this as the municipality giving us a hard time. Municipality giving us a hard time, my goodness. What it really is to ensure the safety of not only the occupants of the property itself, but of the block or neighborhood as a whole. Because if we think about it, and I don't know this for a fact, but what I've noticed over 10 years is the areas where the homes tend to be a little bit older and a little bit closer together have more stringent occupancy inspection requirements. And I think there's a few things that are adding to that. Number one is the homes are older, so they may not have up-to-date things. So they may not have carbon monoxide and fire detectors everywhere that they should be per code to alert the occupants of a fire. There also may be older electrical systems in those homes, so they're more likely to have a fire or experience a fire. When we have homes that are super close together and the occupants don't wake up because there's no smoke detectors, we can have a total loss of one property. And when there's only the width of this table between homes, that fire can spread through all of the homes nearby. And that's a big problem because it's not only a safety issue for the people that live there, but it's a safety issue for potentially the whole neighborhood. And again, I don't know this as a fact. I'm kind of pontificating on this, but as we look at it, we're seeing occupancy inspections are harder to schedule in certain areas. And that's because code enforcement is usually done by the police officers or the firemen. And if you have a hard time scheduling that, that tells me that we also have a smaller fire department or a smaller police force. Therefore, if we have a fire in one home and less ability to put that fire out, we need to prevent that fire from happening instead of, an ounce of prevention is worth a pound of cure with that. So that's really what they're looking for with these occupancy inspections. So they may be a huge pain in the butt, but they're really necessary to protect everybody in that area. So if you're a seller looking to come on the market and you have a home that's maybe been, you've lived there for a long time, you haven't really paid attention to these things because, it's your house, you don't think about it. It would be really a good idea to kind of look up the codes in your municipality. And for those who don't know, municipality is the township, borough, city that you live in. And find out, do they require an occupancy inspection and what are they looking for? And if it is that you have to have a smoke detector outside of all the bedrooms, total lost things, but like loose handrails or a sidewalk in disrepair or the steps leading up to your house are, shaky or wobbly. Those are all safety issues that an occupancy inspection is going to fail your property for until you remedy it, because not only is it a risk to you as the occupants, but it's also a risk to delivery people, your mail person, people coming onto the property. So they want to protect everybody from that.
And it's interesting. Those are the same reasons that we're seeing insurance policies get canceled right now. Right. Because they come out to inspect it and it's missing a handrail or the stairs are shaky, like you said. And so that's kind of like a double helping with that, but it's also going to help ensure that your homeowner's policy doesn't get canceled when they come out and take a look at that home. I actually have one carrier that won't insure a house if it's within 25 feet of the neighboring house right now.
I think so.
Yeah, so I learned how to use Google Measure if anybody needs a lesson.
Yeah, awesome.
Sam, is that one of those claims that would be considered a big or small claim? Somebody does get hurt because of the property condition, and those aren't a claim. They're nasty.
Because you get into medical, then
what? I mean, liability.
Yeah.
And once you've got a liability claim on your homeowner's insurance, that is something that very much so impacts your rates going forward. Liability claims and water claims, those are the two that they will impact your rate. If you're found liable for burning down because of your negligence or whatever, and you burn down other homes, that comes back to the cause of the fire. And if it was found to be that you could have done something about that, that could be a really bad situation. So talk to your agent about getting an umbrella policy. Not to sound, I don't know the right word here, but I mean, it all kind of ties together, right? Someone gets hurt, they can't pay their mortgage then.
Right.
Either, right? So we're also talking about how does that affect the collateral in regards to the lender and the person that owns the property, right?
Right.
So, I mean, all these things just tie together. So
well, and I think the main thing that we can take away is to be as informed as possible. If you are selling a house, then look on your municipal website, see what is going to be required. They started years and years ago requiring dye tests at every sale in Pennsylvania because, like you said about the occupancy, it's the one time the municipality can say, hey, before you can do this, and you need the municipality to release the tax information so that we can close.
Right.
So people they're always like, I don't understand why we need that. Why does it matter? Because we can't close without that information.
Yeah.
So it's a way, not of holding hostage, but it's a way the municipality can hold hostage those documents that we need to close until they know that it can pass the dye test, can pass the occupancy inspection, and all those things. So as a seller, approaching possibly selling, make sure you're working with someone who's going to inform you of those things, who's gonna let you know and that knows how a dye test works and what's required. Same with occupancy. And for a buyer to know, hey, you might be able to close your loan in 28 days, but can the municipality get us what they need in 28 days? Can we schedule this, read the dye test, all of that?
And just to speak a little bit about dye tests, because we're talking about this word, the word dye test means a lot of different things in a lot of different places. So sometimes it is physically dropping dye down a toilet or a sink or a shower and finding out where the dye comes out. Sometimes it's checking downspouts from your gutters down to where they drain. There's different processing plants in each municipality for how they handle what's considered wastewater. And there's wastewater, which is what you use in your home. So it's your shower, your laundry, your potty, that kind of stuff. And then there's stormwater, which is rainwater runoff. And so a lot of times with a dye test, they're making sure that they're not processing rainwater, which is cleaner than the in-home water that gets processed through the sanitary sewer department. And that's simply because the infrastructure of all of that processing, the pipes are smaller, because we still have all of this old infrastructure underground for everything. And we've got more and more homes being built. We've got more and more people using that system. So they want to check and make sure that they're able to handle that so that, hey, one day you don't wake up and you don't have any water to your home, because it all ties together. So wastewater gets processed and then it becomes water that comes back into your house, which is kind of gross if you think about it. But hey, we weren't glad of drinking a lot of water. Right. But, they want to make sure that they're not overtaxing the system. And the only way to do that is at the point of sale, because they make someone like the closing company responsible for gathering all of this information. And if we don't do those tests in a timely way and they don't pass, then you could close, but you're going to face some pretty hefty fines and penalties for doing so. So definitely stuff to look into. If you're looking to list your home, I would definitely touch base with Krista and look at the municipality's requirements. Sometimes you can do a dye test. In some places, they're good for 5 years. Sometimes they're good for a year. Sometimes they're good for 6 months. Sometimes they're just good the day they're done. But it's worth looking into that to see, especially if you suspect something may be not correct or has been a while. And that way, if you need to do some sort of remedy or repair, you have time to do that and you're not delaying your episode. We're seeing that a lot too. We're seeing a lot of failed dye tests these days with tree roots or things that just needed to be diverted, especially as we head into, third and fourth quarter and then first quarter of next year. We're going to have freezing temperatures and you can't dig anything up in those times. Right. So that can be a severe delay to your closing because you can't fix anything in the winter really in Pittsburgh because it's snowy, it's icy, it's muddy. So it's hard to do.
When again, going back to mortgages and collateral, Becky, obviously some of those things too can be lienable items. And so you start to have things that interfere potentially with the mortgage lien. Right? So that's another reason that I would say probably some of that's important because the lender really doesn't want to be.
The lender wants to be in first lien position, dude. Municipal liens take priority over mortgages.
And I don't know if you girls are seeing it, but I have had a lot more estate properties this year. Sometimes it's an actual estate. Sometimes it's the child that their name was on it or, but in either case, it's that someone has passed on and now they are selling that property. Have you guys seen an increase in that?
Absolutely. Yeah, definitely.
So some of the things to keep in mind with that is if you're selling the family home because one of your loved ones has passed on, you really should be working with a great estate attorney as well to help you through that process. So whether there was a will or not, an estate needs to be opened and you need to go through the probate process, and then an inheritance tax does apply to the property. So that can be a bit of a shock to many sellers when they're selling the family home, that there is a tax that's assessed in the Commonwealth of Pennsylvania when somebody dies, called inheritance tax. And that rate varies based on your relationship to the decedent. So the decedent is the person who's passed away. So it's just something to keep in mind. It can range from 4.5% to 15%, depending on that relationship. And that's of the sale price. So that could be a huge number and a big sticker shock. If you are selling that family home, it's definitely a good conversation to have with an estate attorney or with, any of these ladies. We could all talk to you about kind of what to expect and what the process looks like, because it's also a rather lengthy process. Once you file a return, it takes the state in general 6 to 9 months to accept it. So that money hangs out in escrow for quite some time.
And there are different ways. I've seen different estate attorneys and different estates approach it differently. I've had some people prepay it.
Right.
And then I've seen a lot of people just have it deducted at closing as a line item on their closing disclosure.
Yeah, there's several different ways to do that. The key thing there is once your family member has passed away and you're in the process of listing the home, that would be a great time to engage that estate attorney to receive the legal advice on when you should make that payment. There is a discount available if you prepay the inheritance tax in contemplation of filing the return. I think that discount is it's decent. I don't know the amount.
It was enough that my seller did it. Yeah. She's like, yeah, take this money and hold it. And
And then we have a lot of different ways to kind of decrease that impact on you as far as waiting for the money to come from the state. We can cut checks directly to the Register of Wills, that kind of thing, to make it so that it's not as painful. But it is unfortunately part of the process when somebody has passed away. So just something to kind of keep in mind, that there will be a rather large amount of money held back for a period of time when you sell that property.
Absolutely.
One of the things I've noticed about these states that I'm seeing is because it tends to be an older person, seeing a lot of deferred maintenance on homes.
Oh, for sure.
Right? Yeah. And so I've had a number that we're actually doing renovation loans for because there are things that are missing or not right or need to be done. And the executor or executrix doesn't necessarily want to take care of that. They're already taking care of the estate, right? Why not just add one more thing to their plate?
Right.
But a renovation loan where you can close on the property in its current condition and have the renovations done after closing has been a great solution for some of those properties.
Absolutely. Because otherwise the seller, the executor, the family is putting up 20. I had one recently where they put over $50,000 into things that needed done. So they had to come up with that ahead of time to do it versus a buyer just getting a renovation loan to take care.
I would say just to add from an insurance perspective, those can be tricky because depending on when the person passed away and when their current insurance policy renews, that policy could be non-renewed because the person has no insurable interest because they're not alive anymore. And so now you've got a vacant home, most of them, and then it's for sale. So those are two things that insurance carriers get a little bit nervous about. And we have had a lot of those. I mean, not a lot, but I can think on the top of my head 4 or 5 of them just in the past 6 months where they're in that exact situation. Their current policy is not renewing them. The house is vacant and now it's for sale. And so what do you do? And we do have one solution, and that's it. And we have a company called Vacant Express, and they will insure a vacant home, and I can do a 3-month policy. So that'll get them closed until closing, hopefully. And if not, we just renew it. They're not the cheapest policies, but they're not super expensive either for that situation. As long as the house is in good condition, we can do those. Those are tricky. And those policies also work for people who buy a house in another state, move, and then their house is for sale. Because they can run into that same situation. So we've been doing a lot of those as well. They're things that people don't think about because why are they? I didn't. That happens, and they're like, cry, I don't have any options.
Right.
Work with a broker. We have options, and we can help find a solution.
Well, I do this every day for 25 years, and you have all three said things today that I had never even thought of. So I think it is so important to work with a professional and to work with someone who has a team of professionals behind them. So I just want to thank you all for giving us your insights, and there are always pros and cons of waiting. Like we said, that interest rate may come down, but those prices and competition will go up. So if you have any questions about anything, feel free to reach out to us. You can call, text, email, anyway. All of our contact information is below, and we hope to show you around Pittsburgh and let you know what's happening.